Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Optimus will make Tesla great again. Pause. This article was written by The Techie. Summary. Pause. Tesla, Inc. remains a buy in my books, as its future pivots to robotics, AI, and energy infrastructure, not just EVs, giving it long-term upside. Q4 25 results beat consensus despite auto segment weakness. Energy generation and storage revenues surged 25% year-over-year. TSLA's energy business is central to the AI infrastructure build-out, with grid-scale storage and solar poised for accelerating demand. Massive CapEx investments in AI, robotics, and energy signal TSLA's strategic evolution beyond auto manufacturing. I hereon share my sentiment on TSLA stock and why I remain bullish in the long term. Tesla, Inc. TSLA is up around 3% in pre-market trading on Thursday after the company reported Q4 25 results that came in above consensus. The story here wasn't the numbers, nor was it guidance, but CEO Elon Musk's robotic vision. I'm maintaining Tesla with a buy at current levels and see that this print further cemented my thesis on Tesla's future being robotic, with the main catalysts going forward being Optimus and robotaxis. Energy has been part of my longer-term thesis as well, and it's nice seeing that starting to play out. I think Tesla is well-positioned in the areas that matter most, and energy is increasingly central to the AI infrastructure story. As hyperscalers and AI data centers ramp up power-intensive workloads, demand for grid-scale storage is accelerating. Tesla Energy is directly exposed to that build-out, further positioning the company to benefit from the same AI CapEx cycle that's driving demand across semis. This diversification story is one I'm optimistic about. I'll get to all that in a second, but let's take a look at the numbers. Earnings. While Q4 25 results came above expectations, revenue for the quarter fell 3%, marking the company's first annual decline at $24.90, above consensus at $24.79. EPS for the quarter came in at 50 cents, above the 45 cents consensus. FY25 revenue was also down to $94.8 billion, from $97.7 billion a year ago. The pain point was the auto segment, which was down 11% for the quarter to $17.7 billion, from $19.8 billion in the year-ago quarter. Earlier in January, Tesla reported a 16% dip in vehicle deliveries for the quarter and an 8.6% decline for FY25. So the results didn't come as a surprise to anyone, as negatives were priced in prior to print. Net income came in at $840 million, down 61% or 24 cents per share, from $2.1 billion or 60 cents per share in the year-ago quarter, while operating expenses were up 39%. Driven by AI and other R&D projects. Total GAAP gross margin was up 386 basis points for the quarter and came in at 20.1%, up from 18% quarter-over-quarter and 16.3% year-over-year. The energy generation and storage segment, which is a point of focus for me, was up 25% year-over-year and came in at $3.84 billion, up from $3.06 in the year-ago quarter. Services and other segment revenue was also up 18% to $3.37 billion, from $2.85 billion a year ago. According to Musk, the solar opportunity is underestimated. We think the best way to add significant capability to the grid is, or not only to the grid, let's say, powering AI data centers is solar and batteries on Earth and solar in space. So that's why we're going to work towards getting 100 gigawatts a year of solar cell production integrating across the entire supply chain, for raw materials all the way to already finished solar panels. According to Tom's Hardware, PG&E, California's largest electric utility company, has seen a more than 40% jump in requests for power supplies from data center developers this year, with AI campuses driving much of the increase. Tesla's ability to ship battery systems rapidly may appeal to developers waiting for capacity, amid long lead times for new transmission and substation projects. I think that the next phase of AI CapEx is increasingly about securing reliable, scalable energy and storage, and Tesla sits at the intersection of both. Megapack deployments, grid-scale storage, and vertically written by the Techie.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.